this is S&P 500, and we just seen that there's a breakout happen last week. Okay, so last week was great, and finally we have been waiting for a swing up, and here's a swing up because I think start from here. I talk about the potential silver lining, whether we see a capitulation to the downside or we really need to see a automatic rally or relief rally. So that is the relief rally, but subsequently it's just hanging there for maybe 3 to 4 weeks with just a test or consolidation. So generally last week we just witnessed there are two breakouts. So first is definitely for the downtrend line or the down channel. So a break above this downtrend line, down channel, I think on this bar this day, that is quite significant. That should be on probably on Tuesday. So that bar there is very significant. And subsequently, we also see that there is actually a breakout happen on this little doji bar. So that's on Wednesday, and Thursday is also a follow through. But Friday we got a reaction. So generally, I think last week was really good. Finally, we see that there's a swing up ongoing, and we talk about the analog here compared to here. So that is a similar analog. There's a March rally comparing to the current rally. So hopefully, we will see the continuation and also follow through to the upside. So let's just concentrate on the current chart. So last week, so what's happening for the last week? So last Monday, so we got the one rejection bar right here. So not really good because it's sort of like hitting a immediate downtrend line, and that comes with relatively big spread. So the spread on Monday was relatively big because if we compare it to like the week before, not like this or this bar, so these two bars, so it's got small spread, but last Monday got a big spread bar. But still, that doesn't really comes with a ton of the volume, ton of the supply. So generally, from the supply point of view, is still kind of favorable because I would say during this process, supply has been decreasing. So especially if you just focus on the trading range. So far, the price is sort of just stuck within a trading range between 3750 and to about 3950. So that is a trading range that we see the S&P have been trading for the past few weeks. So supply has been decreasing, which is kind of a good sign. And eventually, we definitely see a breakout. So last Wednesday, so there's a bit of the effort versus results right here. So if we compare to Wednesday bar to Tuesday, so there's definitely a effort versus result. So if you hover it, like see my mouse here, the volume is actually increasing. So on Wednesday, so with the increasing of the effort behind on Wednesday, what we get is actually a small spread bar, but still is a successful breakout. So the intent is actually fulfilled, which is a good thing. But in terms of the spreads, we got a smaller spread if we compare to this bar. So suggest the presence of supply right on this bar. So next bar is sort of the confirmation bar. We really need to see if there's really supply right here, then we want to see a reaction. So on Thursday, what we see is even higher volume, so suggests there's some kind of absorption. But if you look closer, maybe let's jump to the hourly time frame and let's take a look at the progress to the upside. So if you look at the progress to the upside, probably it should be quite obvious, something like this. Okay, this. And even eventually it's sort of a little bit here. So from this much progress to here, and to here. So what does it really mean? I think from this picture alone, you can definitely tell the upside momentum is sort of fading. So there's an exhaustion of the up momentum. So suggests we might need to watch out for a reaction. So the reaction actually comes on Friday. Okay, Friday reaction, and not that scary yet. But supply is there. So if we look at the daily chart, in terms of the spread, although is sort of having a bit of the demand tail. So there's a bit of the demand tail right here, and the close is not too bad. So a little bit like a inside 8 bar or a bit of the harami, apart from the violation of the upper tail. So overall, I would say there's definitely presence of the supply, although it's sort of kind of lower than on Thursday, but still there's definitely a presence of supply. So I would say that this could be a backup process. So if this is a sign of strength rally, so what we are waiting for is definitely a backup process or another test. So we need to see some kind of test or backup process before it settles itself down with a decreasing volume, ideally, and to resume the momentum to the upside to at least test the access zone or the resistance zone. So 41 to 42 is the natural place for the targets for a reaction to happen. So this is quite an important level because in terms of the point and figure chart, which I'm about to show you just in a few minutes, there is definitely a access zone right here. So there is a support, then become resistance. So right here is just a natural place where we can expect to see a more meaningful reaction. So far, if we just want to stick to some kind of the structural analysis, I will still probably simplify it to this whole chunk right here. We see the sell climax, supply is definitely increasing, followed by this is a technical rally, automatic rally. That is a secondary test as a sign of weakness because it actually formed a lower low. So far is still in B, I would say. That's A. Definitely this is B. So however, in real life or real trading, we definitely see a lot of the chart do not really obey the textbook style template or the schematic. So what if this is a Sangha rally? So for the bullish case, so if this is really very bullish case, then I think this trading range all the way from here and then extend it to maybe the low in May. So their whole chunk of the accumulation range. So right here, if really bullish case and if really indeed it's time to leave the trading range, means that should be a Sangha rally. So like I type it here, Sangha rally plus a BU or phase B test. So it's either way. So it's either a Sangha rally plus a backup action, or just too early, it's just a phase B test. So based on the textbook style schematic, is definitely stick to the phase B test, because this is A, then definitely this is B. And in terms of, I mean, anything can happen. So I still want to consider a very bullish case. So of course, we need to judge the quality of the rally. So far, it's too early to tell. So we need to see how we actually react right at this zone. So right at 41 to 42. So if indeed we get a very shallow type of the pullback, then there's a high chance that the whole chunk right here, there could be an accumulation and is probably ready to have another rally to test a higher ground target. So if it breaks this zone, like 41 to 42, then the next level or the rational level could be somewhere around this bar. I would say 43 to 44. So test of this bar followed by the upper resistance 46. So of course, this is the most bullish case. And if this is just a normal phase B test, and that could match up well with what I shared with you last time about the midterm election seasonality chart. So where we see that from July onwards, then we see there's a consolidation. So that could be very similar to that kind of the scenario situation. So if there's phase B, then we can look for some kind of the reversal. So consolidate, and eventually it just fail. So failure right here, break below 41, then likely it will just coming back down to test the low right here. So test off the swing low, 37 to 38. So then it could just bouncing up and down. And that is sort of just keep it as neutral, because this is technically still a trading range if the rally could just go all the way to test 41 to 42. All right, so far I still stick to these two scenarios. So one is the super bullish case, means that it will just test it, shallow pullback, and then continuation to the upside with a breakout, and then to test 43 to all the way to about 46. And the second is definitely a test, and then followed by something like this, and then coming back down, break below 41. Then it's still a trading range between 42 to about 37 or 36, 40, 50. So still technically within this trading range. All right, so let's just go back to the slides here. You can definitely see that there is there's a two count right here. So the first count is just this little segment. So the first segment based on kind of a spring. So there's a spring right here. So you can see that it's just a temporary commitment followed by a Sangha rally. So that's sort of the backup action that we can expect. So the first segment count is around 41.60. I think that is very good. And it's just the natural place that we can expect some kind of the reaction. So 41 to 42 is just the previous resistance zone. And if we just extend the segment, and we can definitely see there's a higher target from this PNF chart. So how high? Is somewhere around 47.10. So that means it's just a break above 4600. So that is definitely the most bullish case. So of course, there's a lot of the levels that you need to overcome. So let's just walk through level by level. If it can just reach the first target, first level, 41 to 42, with a very shallow type of a backup, then certainly there's chance to go higher to test maybe 40, 43 to 44, and then eventually it could work its way up to test 46 to 47. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.